So if you were one of the people that thought the market ran by you and your opportunity to make money in this market was over, think again. The market is finally starting to make sense. I mentioned in a video 2 weeks ago the difference between the stock market and the economic market. In my video yesterday, I challenged the theory of a V-shaped recovery with the thought process of an awkwardly shaped W that's not quite formed on the other side of the letter, but some sort of W. Nonetheless, the stock market volatility continued for the third straight day for the first time in weeks, with the Dow losing nearly 7% and the S&P 500 shedding nearly 6%. Oh, and don't forget about the NASDAQ. It decided to participate in this down market as well. I still believe the markets will end 2020 in the green or somewhat flat as long as we don't see two major things that I mentioned before: a spike in new coronavirus cases and sustained high unemployment. So far in the reopening process, we have seen a slight uptick in new cases. However, it has not ballooned out of control, not as of yet. Hopefully it doesn't. Additionally, the May jobs report was awesome, but I fear that we could see significant revisions in the months ahead. 40 million people unemployed is big and a heavy ship to stop, turn around, and move the opposite direction. I'm not saying that it can't be done, but I do not feel that trillions of dollars of economic stimulus would have done it in a month or two that quickly. Oh yeah, and speaking of that stimulus, the US debt levels have ballooned to almost $56 trillion. This is at the same time that household net worth tumbled in the first quarter of the year, which only prices in half of the response from the coronavirus. It was only in the first quarter. This doesn't encumber anything that took place in April, May, and thus far in June. More pain still could be ahead. We are just in the tip of the economic collapse. And as I mentioned before, I do not have a crystal ball to predict tomorrow, but I can predict more pain as the unemployment rate will more than likely remain at near our current levels for the remainder of the year. Steve Mnuchin stated that the U.S. cannot shut down the economy again. This is in the face of rising COVID-19 cases. We have more and more states that are opening up. Everyone is through phase one, and most states are starting to progress to phase two. Most metropolitan cities are starting to progress to phase two of the opening process. We just had some theme parks in Florida are starting to reopen now. SeaWorld reopened on yesterday, on June the 11th. So it's still to be seen how bad the cases can be from the economy reopening. This statement that was made by Secretary Mnuchin during the trading session spooked the market and enhanced fears as a shutdown is possible if COVID-19 cases get out of control again. So if the Treasury Secretary says that it isn't a viable option for the economy to shut down again, how does that make you feel? As an investor, I know how it makes me feel. It makes me nervous. It makes me nervous as ever. But I will caution myself and hold on to the fact that the Federal Reserve will continue to print checks and continue to provide money for the economy. We'll talk more about that. So if the Treasury Secretary says that this isn't a viable option, meaning that the economy will not sustain another shutdown, what do we do? Does this cause investors to spend more money? Will it cause consumers to go out and spend more money and go shopping more? Or possibly, does it cause more houses to be sold? Will more people be out there buying houses if they don't have any confidence that, the economy from a health standpoint will get better. Because if shutting down the economy are shutting down the country again because of COVID-19 cases spiking, if that's not a viable option, then as the virus spreads, we should just all live and, bear it, grin and bear it. Is that what we're supposed to do? And yes, interest rates are low right now, but the Fed guy told us yesterday that rates will be low for as far as I can see. No, not that far. But he did mention that he will keep rates low and that the Federal Reserve will maintain an economic monetary stance that is accommodative for the economy to recover in perpetuity. So is there anything out there that will cause the Federal Reserve to increase interest rates? Anything within the next 2 years possibly to increase interest rates? As an investor, I always advise clients to maintain a fully diversified portfolio that meets the parameters of your risk tolerance. In times of high volatility like this we are seeing right now, this is a great time to revisit your portfolio allocation that is more than likely out of whack after a recent market run-up. Specifically, the equity allocation may be overweight, even with the pullback that we have seen over the past few days. Additionally, I do not believe that we're going to see exactly a W. The V-shaped recovery, no, that's not going to happen. We've come close, but it looks like we're hitting our head on the glass ceiling and we're not going to break through it. More than likely, everything that we've seen thus far was a result of all the economic stimulus, all the free money that was priced into the market. As of right now and over the last week or so, the Federal Reserve and Congress has said that more than likely we're not going to see a second economic stimulus, at least not in the form of direct payments to individuals out there. So what does that do when that notion is put out there? It causes people to be more cautious. They don't spend. They don't go out and order stuff on Amazon. They don't go out and really pursue buying a new car, a new house, and things of that nature, because we still have 40 million people unemployed in this country. We don't know what's going to happen tomorrow. We don't know what's going to happen a month from now. We don't even know if school is going to go back this fall. There's a lot of game changers out there to consider in our economy right now. So why would people go out and spend a lot of money and stimulate the economy in a current stance that we are in right now? So I don't believe that we're going to see this true V-shaped recovery, or at least the type of V-shaped recovery that will shoot up really far past where we saw at the market highs back in mid-February. However, the market will go down some. It will have somewhat of a small correction. It may feel painful because it was so violent, but you got to remember, whenever you hold a beach ball underwater for a very, very long amount of time, that pressure starts to build under that beach ball. And when you move your hands from over that pressure or over that beach ball, all that pressure that's under is going to cause that ball to pop up high and shoot out of the water. Essentially the same thing was done, but just in reverse order. So think about it this way. All the money, all the economic stimulus that was placed into the market was keeping the market going up. It was propping the market up. It was propping the market up. And then as soon as the thought process, as soon as the notion that that money is no longer going to be there or is going to start to dissipate, the market starts to deflate. This is something that we've seen over and over again in our economy, and something that is not going to go away. It's going to be there with us. So I believe that we could end this year positive in our market. We could end 2020 very well in the green, or roughly flat, somewhere around there. We will have double-digit unemployment numbers at the end of this year. That is something that we will more than likely not get around, but it's very possible that we will end this year positive. So how did you invest in this market with that thought process? In my video yesterday or a couple days ago, whenever it was, I can't remember, everything is starting to run together now, but I gave you some ideas on how to position your portfolio to maintain income in your portfolio and to also reduce any volatility that we could see, such as that has happened yesterday, the day before, and the day before that. So take a look at that video. Give me your ideas. Leave your thoughts below in your comments. Let me know how you feel about our economy right now, how you feel about the market right now. Are we going to go back down to 16,000 on the Dow? Are we going to go back to 1,600, which I've heard someone mention on the S&P 500? That'll be pretty rough if we do. I don't expect and suspect that we will do that, but who knows? Anything is possible. Leave your comments below, and this is your first time coming to my channel, I ask that you please hit the subscribe button. Please ring the bell so that you can get an update each time I upload a new video. And lastly, please give me a thumbs up. Please like this video. Please share this video to help me increase the financial literacy of this globe. Thank you so much and have a great day.